Welcome to our Futures and Forex Trading Buddy Futures and Forex forecast for next week, starting July 3rd. This is the weekend before Independence Day. Welcome. Glad you're with me. And looking for some setups for next week's market. Even though it is a shortened week, we will still have opportunities to trade. The equity markets will be closing early on Monday, but this is a forecast for you swing traders out there, and obviously any day traders can take what we're looking at for what it's worth. The first market that I'm looking at is wheat. I'm actually looking at a lot of the grades. You can see I've got the wheat market. It's been coming down. Made some money on this upward move. I've been scaling in using the P3 method here, using pivot points, price cycles. So right in here, when it came down, I added one contract. It's come back down to here. I added two. And then if it comes down into this range, I will likely add another position, 3 contracts. And it is currently down, but my stops are down in here. And if we're able to execute this trade right in here and stay above those stops, all it needs to do is just bounce back up into the 700 and we're making really good profit. And it's possible that it could come back into here and then just kind of stay sideways above these lows. Pretty aggressively, I remember this day pretty aggressively rejected those prices, and the market has come up with seasonal tendency in the summer. Typically we see slowing, but the commercials have been buying quite extensively. We are oversold. We should see some sort of bounce in here. Now, for the something similar, you've got a grain market that's even more overextended is the corn. We should see a bounce as well, and it is already near the lows and in oversold territory. If we look at a weekly chart, we could see farther back and see that it is at a pretty significant low here. And so you can see we're close to these lows, and if it does break these, this is where our stops will be, but it is a really good risk-reward ratio because we have a pivot here and a pivot here that we could put our stops. This would be according to our P3 method, if we get a contract right here and a couple more right here, that would be our risk. And having it come back up into these ranges up in here, that would be a good 1-to-1 risk-reward ratio. And then if it comes down, we'd have an even greater reward on this particular trade. So I'm watching the corn market as well. I've got a position on. I just closed today a position in the soybean market because I was buying into this the downward move. It looks better on the daily. So let me switch over to the daily here, and we could review that just really quick. This isn't a forecast. I'm actually out of this market, but as it came up, took profits, came back down, got in a couple more positions and took profits right in there. It is breaking out, but we are getting into a seasonal possibility of it not going anywhere. So it just had a great profit there based on my risk reward. Let's take a look at the stock futures. Obviously, the ES is the all-important one. We want to add the important advanced decline line. So let's do that really quick here. It is really important for us to see what stocks are advancing and which are declining. You could see that we have a let's get orange here, that we have a revisit of these highs up here, but the advanced decline line is breaking its old highs at the same spot. That is bullish. And so we would love to see those type of divergences, plus the fact that, the 4th of July holiday, Independence Day, has some great seasonality trades, tendencies to rally. The stocks have a tendency to rally around the Independence Day holiday. So with some of those things, with the advanced decline line, we've got momentum to the upside. It's in overbought territory on the Williams %R. But look at this over here. It was in the overbought territory, and it went up another 150 points and stayed up in here for another month before it had a significant pullback. I'm expecting something similar. We're back in a bull market. All those fears of recession gone, right? You don't want to listen to those pundits saying, "Oh, this worst stock market crash is going to happen next month. It's going to happen on this day. It's going to happen in 3 months," and all of them have been wrong. I've been following them since the beginning. of last year. Last year wasn't great. They said 2023, the beginning of this year, it was just going to be worse than last year, and that has not been the case. So other markets I'm looking at in the futures is the natural gas market. This is the daily. Let's actually get rid of our advanced decline line there. This is the natural gas market. I'd like to actually show you the weekly on this, and you can see how overextended it is to the downside. There's a lot of divergence happening in some of the key indicators that we're looking at, and so there is a possibility for this market to have somewhat of a rally back to these old highs, if not to this old low into this 5 area. Now, it's not going to happen next week. It's not going to happen next month, possibly, but we have seen this market, have some big ranges, and so it is a possibility that we could see it the next couple months, a day or two like that. And so I am in long on this, and you can see I have my stops down in this range of this market. You probably want to trade the micros. One tick is $10, and so you got to be careful with your risk reward here, but with your risk. But the risk reward, oops, it needs to be green. The reward is quite good if it does come up there. So, and if we have a pullback, I'm planning on adding another layer that has a little bit more risk there, you can see. But then if it does bounce up, we're going to have quite the reward. So that's another futures market that I'm watching for swing trades. The other one that's possible, maybe for a short-term swing, I'm looking at gold and silver. Gold is the stronger, and the daily, let's switch back to a daily. If we switch back to a daily, we see that we've made a 3-bar reversal, meaning that we've had this movement down. It's made a stop, and the next day, today, made a break of that. So we do have this downward trend that it's still staying under. So what I'd like to see is maybe a down day, and then the next up day that breaks this trend line is a confirmation. The Williams R is in pretty good shape as well, where it's made a higher low and a new high there. Keep an eye on this market if the other ones are too scary, but your risk reward on this, if it does make a break, you have your stops below this one, and I think we could potentially get back into this 1980, 1990 range, up in this range that happened right there. See that? And so I guess I could do something like that. That's kind of the old consolidation range that I think we could come back into. So that's it for the futures market. Let's move over to see what Forex is providing for us. Okay, here's a chart of our Forex market, something that we look for on a 4-hour and a daily. The dollar yen is in a position where really some strong momentum to the upside. We want to see this start to turn down, but the fact that it's up so high, 85, it doesn't go up that high that often. It is actually the highest it's been in the last couple of years. So keep an eye on this one for somewhat of a pullback. I would say maybe from 200 to 300 pips back down to this area right in here, these old highs, this old low. If you wanted to take a stab at that, your risk would be upwards into the 100 pip range. You could even go 200 pips and safely scale into this, depending on your lot size, but you'd have a nice risk reward, of about 300 pips reward with 100 pip. So you decide on your entries. You decide on what you're looking at. This is a setup that I'm keeping an eye on. I've been actually trading the euro yen quite a bit because of the same thing. We've got these setups. Let's pull up the euro yen on the daily as well. Where are you? There we go. These setups of overboughtness, strong trend up, coming down, and then getting that divergence and happening. We've had 1, 2, kind of a 3 pullback here, but you can see how the daily really overextended. Could we come back down to these highs? That's about 700 pips. I don't know if it'll come all the way back down there, but the daily is starting to turn down already. And we've got some overboughtness that's been going on quite a while since it broke this. So at least halfway, that's a good 350 pips. So again, if you wanted to take a stab at it before a trend change would definitely be something like we saw here, but it kind of failed based off of that pivot. We saw a high, it made a new low, it made a lower high, and then had it broke this, we probably would be seeing it come down. It's made a high and it's sticking around that high and it's making these lower lows. And so I expect to see it kind of pull back here. I don't know if it'll happen quickly. The carryover trade is still really strong, you know, against the yen. The yen hasn't raised rates and the dollar and the euro have. And so it just makes sense holding the dollar and holding the euro for these banks, right? But nothing goes up forever. And even if it continues its uptrend, typically we have, you know, uh, profit taking and other things like that. So other markets that I've been looking at this week, I'll just share with one that I was looking at this week. Was the Aussie CAD and some of the Aussie pairs, even the Aussie New Zealand was looking pretty good. I made some money on these moves upward, right? On my day trading, watching these. And so if you look at the daily of the Aussie Kiwi, it's a lot stronger than the Aussie CAD. So the Aussie CAD's way down here, gives us a buy signal. But the Aussie CAD also, the Aussie Kiwi gave us a buy signal too, way stronger. So I want to be buying stronger markets. That's something you want to do. So look for these type of setups. The daily was looking pretty good too. Very strong market coming back down into these ranges and then giving us another buy signal. And so this little pullback is actually pretty good, a good opportunity. I mean, because typically we could buy into this with some layers using our P3 method, have our stops below that, and then have our targets, you know, back toward these levels, and then back up to these highs as well. So lots of opportunity in these Forex markets as well. So I made some money on the Aussie CAD and Aussie Kiwi earlier this week. I'm looking for those opportunities again next week, and I'm looking those on the buy side. I'm looking for sell opportunities with the yen pairs. And we didn't look at it, you know, like the Swiss yen or the CAD yen, very similar situations. This is the Kiwi yen, a little bit weaker. The Kiwi yen here giving us a signal, and it's at these old highs. So look at these, it's kind of still at these old highs where the euro and the dollar have just blown those highs out of the water. Typically that extra volatility means better opportunity, but if you wanted to play it safe, you know, sell the weaker, right? Sell the weaker, you could possibly see a potential movement back down into here. All right, well, that's it for this week. Going into the Independence Day holiday, I hope you have a great Independence Day holiday, and then that you're always watching your risk and always taking care to protect your capital, your trading capital. Don't hesitate to reach out with questions either in the Discord or to my email, kevin@tradingbuddysystem.com. Happy, let me just type that out, and happy to field any questions, particularly regarding these forecasts. These are the trades that I'm looking at. These are not trade recommendations.com. That's my email there. So, all right. Thanks everybody. Hope you have a great weekend. We will talk to you again next week.